Nebius Group reported their Q4 earnings, and we'll get into them on today's video. If you recall, we recommended the company back in December. We also gave you an update on the company after the whole DeepSeek situation. Both proved to be very good buying opportunities as shares of Nebius up 47% year to date. We are seeing shares slip in the regular trade as I'm recording this as trade is going on. We'll look at this one technically, talk about, hey, if you bought some shares and they've done well, or you want to add to a position, we'll talk about, is this an opportunity? We'll go through the financials as well. Company raised $700 million, including from an investment from NVIDIA. We'll talk about what that means. We'll also connect some dots. The company gave us very clear details on their H100, H200 allocation, also a very specific Blackwell allocation. Thought that was interesting. We'll go through the conference call as well. Not a lot of coverage on this on the mainstream site. Shout out, I think it was investing.com that I got a transcript of this from. And so we'll pull out some of the most interesting aspects of the conference call. I'll give you my take on that. We'll also talk about a couple other things that probably don't get talked about enough. This company actually has multiple business units, and because this company doesn't have any like analyst coverage, in fact, they talked about that on the conference call that they'll be working on that. Nobody even knows these other business models that they do, and some of these are very exciting, including an autonomous vehicle and an autonomous robot that is delivering food at Ohio State in partnership with Uber, DoorDash, and others, or Grubhub. And so this is very exciting. This is a very exciting aspect of the company, and nobody even talks about it because basically nobody is covering the stock. So it makes it exciting from that standpoint. We'll also go through the financials as well. We'll get you all caught up with Nebius. What is going on, investors? Hopefully you guys are doing well out there. Like we said, year to date, you're up 48%. We recommended, or John recommended, John's on our team here over at Equity Empire. You'll see him on the channel a little bit more as we start to get rolling here. But he recommended this. He's going to be our small cap expert. This guy picks small cap stocks. I'm not a small cap expert, but this guy finds them and they are absolutely fantastic. The story on this stock really doesn't get any better, okay? They used to be a Russian-based company, and they ran like more or less kind of the Google search engine of Russia. Obviously, what's happened over the past couple of years in the country has really created some disruption, to say the least. We don't need to get into that, but the company separated from that country and that business model, and they formed a new entity based in the Netherlands, based in Europe, and they were able to raise $700 million. So this is a, quote, startup, but with years, decades of experience at running these types of systems. And so that makes it exciting from an investment standpoint. So they raised $700 million. This was oversubscribed, and now this company has over $2.5 billion on their balance sheet. I'll show that to you here in a minute. So you have to factor in when you're looking at this company, and depending on where shares trade today and where they trade down to, you've got about a $10 billion valuation on this one. But the company has $2.5 billion in cash. Now, the company is burning through a lot of cash in order to ramp up its business. Talk about that here in a second. But I want to get to NVIDIA. And so when you're looking at a company like this, you can connect some dots to NVIDIA, connect some dots to other semiconductor companies as well, the whole supply chain around NVIDIA. You could also connect the dots if you wanted to. If demand is strong at a small cloud provider, put that in air quotes, like Nebius, well, it's probably sure as hell pretty darn good over at Amazon, Google Cloud, and Microsoft Azure as well. The company is rolling out a facility out here in the United States in Kansas City. They have initial kind of 5 megawatt initial phase, with it being able to be expanded up 8 times, up over 40 megawatts. These are involving the previous generation of NVIDIA at this point are the H100 and H200s, but those still have likely several years, maybe even a decade of life left into them. But they also talked about the Blackwell GPU, which is the upcoming or kind of the current generation that NVIDIA is just beginning to start to ship out to its suppliers. The company said that they'll get 22,000 of them. So they gave a very exact number. NVIDIA obviously has an investment in this company, so the allocation here is probably absolutely for sure. And they say those GPUs should be in US and Finland data centers sometime in 2025. Now, on the conference call, they gave us some more details around that. I'll get to them in a moment. But but the CEO says that their projected 2025 annualized revenue run rate should be between $750 million up to $1 billion. So this is a company currently with a market cap of $10 billion, with over around $2.5 billion in cash. And they're saying they're going to exit calendar year 2025 with $1 billion in annualized revenue. That is across all their business units, but primarily the cloud business where they're renting out these NVIDIA GPUs. That seems relatively exciting. And while the valuation from kind of an earnings standpoint, probably a little high. Those of you that have invested in stocks like Palantir at 100 times sales, well, this one is currently valued, at least at the end of 2025 sales, just at about 10 times sales, and it's growing rather rapidly. Now, based on the contracts already in place, their March annualized revenue run rate is $220 million. So they're saying that they have contracts already in place with companies and businesses that want to run AI applications on these H100s that they've secured from NVIDIA. The annualized revenue of that should be $220 million. And again, the company is projecting between $750 and $1 billion. And so if you get up in over $200 million in a single month, that puts you right on pace to be able to pull that off. Now, AV Ride is their autonomous technology platform business, and it signed a contract with Uber, and Uber Eats has already deployed AV Ride robots for food delivery in Austin, Dallas, and Jersey City. They also talked about a project for this at Ohio State University involving these smaller robots. Now, some of you that don't live in dense environments, and I live out in California, but I don't live in one of these major big cities. I have traveled to parts of California where these little guys are all over. I mean, it's unbelievable. You show up and you're like, what's that little box rolling down the street? And it's these little delivery things. So some parts of the world and some parts of the country, in fact, the vast majority of the country isn't going to see these types of things, but this is something that is already in place and is going to roll out massively in dense urban environments, these little delivery robots, aside from also these Waymo style cars that have these large camera systems for autonomous driving as well. So the company is in two really hot sectors. You got autonomous delivery, and then you also have the cloud and AI infrastructure. So this company is delivering on both fronts. And once analysts start covering this, the Goldman Sachs, the Morgan Stanleys, the Citis, the Wells Fargos, once they pick up coverage on a stock like this, then I think you probably have a next leg higher. Now, they are just beginning, like all data center providers, of starting to take delivery of NVIDIA Blackwells. That's the current generation, and they'll eventually start to lease these out. What they noted is they expect to sign longer term contracts. So in order to gain access to Blackwell, and there's a ton of AI startups that want access to it right away. So in order to get access, what you have to do is commit to like an entire year, maybe even multi-years of reserving that. It's basically like a computer system that you're going to reserve, whether you use it or not, you're going to reserve it. And so that's what's happening in the cloud space. As Blackwell comes online, the biggest and baddest and richest AI startups, they're going to be bidding on these things. And the way they bid on them is they reserve them for a long period of time. So the company is going to sign longer term contracts with Blackwell. H100, H200s, those are going to be shorter because there's wider availability of that. Also, the ability to charge higher prices over time probably gets a little bit more difficult. And the company talked about that on the conference call. Now, the company also said, based on some of their calculations, they believe the payback period is somewhere between 2.5 years and 3 years. And they're referring to these H100s and H200s. Think about the cloud business almost like a real estate business, where if you just start out in real estate, you have zero properties, you get a bunch of money from investors, or you had a bunch of money, you go out and you buy a bunch of property. You buy this property, maybe you renovate it a little bit, and then you start renting it out. As those rent checks come into you, then you are able to start to realize that payback period. Now, obviously in real estate, the payback period can be decades, can be really, really long. With the H100s and H200s, it's a little bit different. The payback period, like they said, is actually 2.5 and 3 years. So the company is probably going to be underwater financially, and we'll go through the financials here in a second so you got a really clear picture of this. They'll be underwater financially for a little while, only because these H100s, H200s, NVIDIA makes a ton of money off of these things, and the company rents these out over a long period of time, very similar to, again, like a property. When it comes to Blackwell, the payback period in Blackwell's is a little too early to say what that will be. My guess is over the long run, it'll be a very similar kind of 2 to 3 year payback period on those. Now, they say, and this is undercovered from the company, is they are experts in building high power use efficiencies and laying the foundation of their cost advantages compared to their other neo-cloud peers. Neo-cloud is an industry term basically referring to any cloud company that is not Microsoft, Google, Amazon, Oracle. Those are called the hyperscalers. Those are like the elite tier. They have clusters all over the world. Now, in order to get a contract, in order to deal with those companies, you might have to be a certain size or be able to pick up the phone. These neo clouds serve kind of a smaller or mid-sized business, maybe a little more specialty business, one that needs a little more customer service because it's difficult to get customer service unless you're spending tens of millions of dollars at these large hyperscale companies. So a lot of companies like these smaller clouds because they are able to get a level of customization and customer service. And so this company, having a rich history in building out these data centers in Russia for a separate project, they have all this experience. They've done all this before. So you're getting the startup vibe of this company, but with expert experience in the back end. It's a very unique company. This is why we recommended it back in December, because this is a very, very unique opportunity for investors. So they're combining all this expertise with developing their own hardware. Obviously, with DeepSeek hitting the news, they saw that demand for NVIDIA H200s really skyrocketed, and we expect more of this in the market. And the reason, because if you're out here in Silicon Valley like I am, there is a frothiness to the AI market that will probably last through 2025, probably into 2026, because what you were seeing is a month ago, nobody even knew what DeepSeek was, or very few people had even heard of it. And then all of a sudden it moves to #1 on the App Store. And then I don't know if you guys saw this, but over the week, Elon Musk XAI company launched Grok, and that is now the #1 productivity in the Apple App Store. And so this reminds me of the early days of the App Store where apps were getting released and boom, they would gain a lot of popularity, or the early days of social media where you'd have these massive growth rates. And so that's kind of what we're seeing. And that's creating a lot of investor interest because you can go from zero to multi-million to one of the most well-known companies in tech basically overnight. That is going to spur a lot of investment and a lot of demand for H100, H200s, and also Blackwell once those come online. Now, we talked about that. Company did note that their December ARR is an industry term for annual recurring revenue. Company obviously rents these server spaces out, and that revenue recurs month after month, and some customers leave and they're basically replaced. Now, the 90 million came below their previous guidance, and then that's creating some pressure on the shares because some investors are going to be a little concerned about the fact that this came in at 90 million in a hot market. They did blame it on longer lead time for some customer acquisition. Could show that there is some competition out in the market. They're saying that startups and companies out there are taking a little more cautious approach. They're trying to build out their infrastructure. I think it's probably a little bit of both. You have a lot of competition in this market, the H100s and H200s. I won't say it's a saturated market, but there's enough availability out there where you might not need to go with Nebius unless they provide something over and above what you actually need. But based on the guidance that the company gave for that March annualized rate, this thing should turn around very, very quickly and very, very nicely. Now, when you look at this from a financial perspective, you have $37.9 million in revenue. This was like 200 or 300%, maybe it's even higher than that. It's like 500, 600% growth year over year. I mean, it's just absolutely fantastic. But just keep in mind, we're not looking at Google here. I'm used to looking at like Google and Microsoft and companies where if you have this type of growth, it flows all the way down to kind of the bottom line. No, this is a startup. Their cost of revenue off of $37 million was $27 million. Product development was 35. So your product development over this company almost exceeded revenue. Look at your sales general administrative, $90 million. So you have to be comfortable with stocks like this. You also have to understand that if you buy into a stock like this, there's going to be days where it goes up a lot. There might be stretches of times where it goes down a lot. That is because this company is on shaky grounds financially. That's just the nature of these smaller stocks. You have to be comfortable with that. Total operating expenses in the quarter was for $189 million. And I told you they had $37 million in revenue. So that growth rate has to sustain. That's why you invest in growth companies, is that number one, you're investing in this growth, but what you're investing in is that this growth maintains. If the growth maintains itself and the company can normalize its expenditures over the course of the year and maybe 2 or 3 years, well, then the profits will eventually come. But right now, they're not there. Losses from operations coming in at $151 million. Last year, it was $93. It paints a similar story for the full year. When you look at the balance sheet, though, the company can sustain this for a period of time. They're probably going to have to do another fundraising activity probably later in the year. They do have $2.5 billion, but what they note is capital expenditures were $417 million. Just for 3 months. As they're scaling up those NVIDIAs and they're scaling up a brand new data center here in the United States and in Europe. For 12 months, it was 808. So it's showing you that the pace they're on is so yes, $2.5 billion in cash on the balance sheet looks great for a $10 billion company, but one reason why that's not expanding the balance sheet even more, expanding the multiple even more, is they are burning through this cash very, very quickly. Not only operating the business, but on capital expenditures, building out the business, because again, they have a 2.5-year payoff rate on those NVIDIA GPUs. So they have to sink money into CapEx, just like a real estate guy has to sink it into a project or apartment complex, and then he or she gets paid back over a long period of time. It's literally the exact same business model over here. So you're going to have to suffer through this, and the more the company can start to tell its story, that's what's exciting about this company, is they haven't really even started telling its story. And so if it's able to tell its story, investors are comfortable with this level of investment. Now, part of the story is there's other business units growing very, very quickly. They have this Toloka business. I don't know if I said that right, but it's basically this machine learning AI company that one example might be an autonomous vehicle drives down the road and its vision cameras are picking up all types of things, maybe a trash can, maybe a person, maybe a car, and all that stuff needs to be tagged on the back end of a computer system. Okay. So this company basically does that among other things. Revenue grew 140%. That's going to be a big business. It also ties a little bit into their autonomous vehicle business as well. The two kind of play off each other. So 140% year over year growth there. Now, that's an interesting business. They also have this 1010 business. Revenue growth was 100% over there. It's basically an education business if you wanted to take some online coding boot camps. I don't know how popular this will be in the rise of AI. I know how to computer code at a very low level. I would probably say on a scale of 1 to 10 on a computer coding basis, I'm like a 3. I'm not really studying any more code anymore. I'm not really doing any boot camps or any training. That is because if you're at a scale 3 coder with the help of AI, it can make you, like with AI, I'm like a 6, or I could probably get a job at like Meta or something, because the AI just really, really helps you become much better. Now, I think probably one of the most exciting businesses is this AV ride business. They just signed a deal with Ohio State University, and they rolled out 100 robots already delivering food on campus. They have partnerships with Uber Eats, that is in Austin and Dallas. They're also expecting to get certification in Japan as well. So you actually get a little bit of Waymo with this. There's a little bit of Google vibes with this company. That is because this was the Google of Russia at one time. So you're getting kind of the spin out of almost like a little mini Google, if you will. They've got this Waymo type of stuff. They have some education business, which Google is not really in, but they have software companies as well growing very quickly inside of the company. Now, technically, this thing's bouncing around today, but we're only going to look at this in its current form. This previous form, you can almost ignore. All of this price action for this company in the past was for a previous business and a previous iteration of things. You can really just kind of focus on this trend, and this trend looks absolutely gorgeous. This is exactly what you want to see with a stock. You're making a beautiful series of higher highs. You've just confirmed a new one. You're making a beautiful series of higher lows. This is on a daily chart. You are now sitting smack dab in the middle of the channel. If you want to accumulate some shares, you can in the middle of these channels. Just understand, this is not Google. This is not Microsoft. This thing will swing 7, 8, 9, 10% in an afternoon. Some of you guys are equipped for that. Some of you, based on my messages, you're not equipped to watch a stock go up or down 10%. Some of that could be that you're putting too much money into this stock. So just keep that in mind. People ask me, how much of you do you have in Nebius? I don't know off the top of my head. It's probably a few $1,000. If it goes to zero, it's fine. If it 10x's, it's not really going to change my lifestyle. Now, some of you out there are different. You're more comfortable investing in these more speculative companies financially. Me, I get a little more excited about buying Amazon or Google or Microsoft at a good valuation because I know those stocks are going to deliver for the next decade, maybe even 2 decades, 3 decades. I'll be an old man. My kids might end up selling those stocks. This one, you've got to get in at the right time. You are probably going to have to exit this one at the right time, but I think you've got a ton of hype that is coming for the stock, based on the fact that they have zero analyst coverage. I mean, nobody is covering this stock from like the Goldman Sachs, Morgan Stanleys. They're going to start doing road shows. They're going to go on investor conferences. They're going to do outreach to those kind of large banks. So they'll eventually get that and they'll tell the story that they've got these very exciting business models that no one's talking about. And then, oh yeah, they have a cloud business that is doing $220 million of ARR this March, and this company will do $1 billion, probably north of $1 billion in terms of revenue this year, $10 billion valuation, an investment from NVIDIA. We told you all of this back in December. Most of you are probably sitting on rather healthy gains. If you're not in this stock, you probably have opportunities at these levels. Hopefully you guys enjoyed today's video. That was a long one, but we got to do it with these kind of smaller companies. They don't get a lot of coverage, so I hope you enjoyed today's video. Hit that like button. Maybe consider subscribing as well. There's like literally nobody talking about these stocks, and by nobody, I mean only a handful of people. Will be one of them. Hopefully you guys enjoyed today's video. I'll see you again soon. Good luck with your investments.